IVM.
Welcome to All Things Policy, a daily podcast supported by Pragati, a flagship media initiative of the Takshashila Institution. We're a bunch of policy nerds based in Bengaluru, and we like to bring a fresh perspective to Indian affairs and an Indian perspective to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hello and welcome to another episode of All Things Policy. I'm your host Shrikrishna Upadhyaya, and the guest on the show today is Sridhar Krishna, senior scholar at Takshashila. Welcome to All Things Policy, Sridhar.
Hey, thanks, Sri. Thanks for having me.
So Sridhar and I are going to be talking about the changing face of global trade in this episode today. We are going to look at some of the predictions made by World Trade Organizations in a recent report as to the growth or the slump in growth of global trade for this year as well as the next year. And then we're going to dwell into the changing nature of the global trade itself, basically the aspect of how services have been slowly expanding as part of global trade while manufacturing is shrinking. And we're going to be examining the reasons behind this, how technological changes have contributed to the shift. And finally, we're going to be ending by talking a bit about how India can leverage this change in the global trade that is happening. So Sridhar, I was very interested in this report that came out recently this month, which World Trade Organization has released as an update to its global trade outlook. This report basically says that, to quote from the report itself, a continued slump in global trade that began in the fourth quarter of 2022 has led WTO economists to scale back their trade projections for the current year while maintaining a more positive outlook for 2024. So, Sridhar, would you like to begin by giving a broad overview as to what are the reasons for the lower growth projections WTO is making? And at the same time, why are they so bullish about 2024?
Sure. Yeah, I mean, when we talk about a slump in global goods trade, they're specifically talking about the slump in goods trade and merchandise exports, right? And saying that they had made a larger projection in the past in 1.7, 1.8%, but now they're saying that it'll be only a 0.8% growth. But they're expected to sort of come back to about 3.2, which is more in keeping with the previous year's growth. So by 2024, right? So that's the sort of headline. But basically, the slowdown seems to be broad-based, right? So that's what the report says. It says like it's across countries, it's across a wide range of goods. It's sort of, especially in categories like in manufacturing, like iron and steel, office and telecom equipment, and clothing, textiles, and all that. But passenger vehicle sales have really surged in 2023, and that's a sort of good sign, right? People don't really know. I think the report has not said that this is exactly why the slowdown has happened, but they are pointing towards things like high inflation, high interest rates, the appreciation of the dollar, which makes the actual trade look smaller in current dollar terms, and geopolitical tensions across the globe. I think like when this report was made, Hamas hadn't sort of intruded into Israel and all this current problems between Israel and the Hamas, but even that Russia-Ukraine war and all the ongoing tensions which exist between the US and China, etc., all that is sort of contributing towards a slowing growth in trade. But oil prices have gone up significantly. When oil prices go up, countries which are dependent largely on export of oil, they have done very well, and they have been importing more, right? So there's been an import growth in those countries because they've been flush with export revenues at the start of the war in Ukraine. And the CIS, the Middle East, Africa, etc., have seen registered significant growth in imports, while regions like Europe, Asia, North America, and South America have shown a decline. So I think overall, that's what's been happening. But they're expecting that import growth in Asia and North America should turn positive in the second half of 2023, while Europe continues to remain weak, at least in their projections. They also talk about the Global Services Purchase Managers Index, shows at about 50.6 in August, but has been trending down. But they indicate that the services will continue to grow, but at a slower pace than before. These figures agree with the World Trade Organization's trade statistics, right, which show contraction in merchandise trade values and stronger growth in commercial services trade. So overall, they see that commercial services trade will sort of continue to grow. I think it sort of comes down to the other point that you talked about, how services are a nice silver lining in this slowing global trade conditions. The other thing which happened after the pandemic were the supply chains got seriously impaired, and so therefore there was this strong dip in 2019, 2020, but then that sort of seemed that seems to have been fixed, and there are no more pandemic-related disruptions. All those seem to have gone away, and but other good thing is the global inflationary pressures seem to be waning. I mean, people expected inflation to persist much longer, but that doesn't seem to have happened. I think all this high interest rates scenario seems to have had its impact, and inflationary pressures are waning. So I think this should mean by 2024, export and import growth volumes should increase, but CIS is one area where they believe that imports might decline a bit. But if the forecast for 2024 is realized, Asia will be the fastest growing region in both import and export sales. I think that's the sense that people have. Statistics on commercial services trade by category are not available at the moment, but I think for the second quarter. But however, it does, and if you see, it's gone up 9% year on year in quarter one of 2023, right? Services have gone up. And as recently as the second quarter, I think commercial services trade was up 19% year on year, which suggests that services may be losing momentum, but it will, I think, contribute significantly to overall trade. And a large part of it is travel. I think everyone started traveling after the pandemic with a vengeance, and travel's really up 58%, and other commercial services, etc., are okay. Yeah, that's how it looks overall.
Right. So there has been a decline, like you mentioned, because of some recent events, starting with the pandemic, the Russian invasion of Ukraine, and now we don't know the consequences of the war breaking out in the Middle East as to how badly it is going to affect trade or not at all. We don't know it yet. But however, this hearkening of geopolitical tensions, trade wars, may have been something which we saw in the news over the last 5 or 6 years, or maybe even as when the US-China trade war started during the Trump presidency. But if you look at the data, global trade has been declining for over 1.5 decades now. It had peaked during 2008, I suppose, and then later on, after the 2008 crisis, it has slowly been coming down. So is that a correct assertion to make, or is today there has been actually an increase in protectionism due to these recent events, or this is just a part of a longer trend that we're witnessing over the last 2 decades?
Yeah, I think protectionism has been on the rise since 2008. I think you pointed out very correctly that 2008 was pretty much the peak in terms of growth in global trade was. Trade as a percentage of global GDP has increased tremendously. I mean, if you look at what it was in around the time of just after the after World War II, the global GDP was at about 3.9 trillion at that time. It's very hard to imagine, but that's what it was. The global GDP was equal to what India's GDP is today. And global trade was only global exports at that time was only about $58 billion. But in the first 50 years after World War II, this increased to $9 trillion. The trade increased to $9 trillion, and global GDP grew from 3.9 trillion to about $28.1 trillion. So the percentage of and this trade has tremendous impact on global development, especially in terms of poverty alleviation. 64% of the world population lived in abject poverty at around the time of the World War, and it came down to about 32% uh, by uh, to 29% in the first 50 years. So this trade has had a huge impact in distributing income more equitably across the globe, helping to reduce abject poverty and so on. But I think after the financial crisis of 2008, there's been an increased sort of protectionism. Global trade in by 2008 had grown tremendously. Especially between 2001 and 2008, there was a fabulous growth, over 300% growth in global trade, and this led to, if you look at in 2008, I think it was about 64% was the share of global trade in global GDP. Right? Global trade as a percentage of global GDP was 64%. Since then, it's been coming down. I mean, I think pandemic time it went down to below even 50%, but now it's sort of back up. It's been going sideways since. It's more like 52% in 2020. I don't know exact number for 2023, but they're in that region. So I think that's something that's happened. And why did this happen? Because I think there's increased protectionism. Apparently, there's an interesting statistic that I read. The World Trade Organization, again, in another report, indicated that there's been an increase of 663% in the number of protectionist policies that have been coming out. So that's been how it is. But if you look at trade itself, I mean, if you look at the top 11 exporters of the world of merchandise goods, you'll find that, the top 11 guys exported about $12.8 trillion of manufactured goods, and the others only about 12.1 trillion. So clearly, protectionism is leading to consolidation with a few, but nevertheless, I think this is a trend that's really bothering people. China does 3.6 trillion, or 14% of global exports in merchandise exports, right? So this country has been the largest exporter of goods in the world since 2009. If you look at China, used to be US the biggest trading partner before 2023. Now Mexico has overtaken China as the largest trading partner of the United States. So I think things like that are happening. So yeah, there are a lot of signs that protectionism is making an impact, not only in terms of the overall size of global trade, but also in terms of where it's being traded from and who's selling to who and so on. I think that's something that is happening. Will exports continue to grow despite all this? I think the World Trade Organization says that despite all these countries reducing their interdependence and integration in the post-COVID times, especially, global merchandise exports are still set to grow by about 60%, 70% between 2020 and 2030. So everything is not gone. I think one is still hopeful that good sense will prevail and protectionism will be soon on the wane. But if it persists, it could spell bad things for the world economy and especially for the global south. I think that's how things are.
Stay tuned to All Things Policy. We'll be right back after a short commercial break. Right. And actually, I want to come to global services trade in just a bit. But before that, a comment on what you talked about, rise in harmful trade interventions over the last decade or so and protectionist measures. Of course, industrial policy and trade policy have come back with a vengeance, and, all kinds of import restrictions, non-tariff and tariff restrictions, export restrictions, everything seems to be going up. In fact, in a study done by Global Trade Alert, which looked at the data of trade restrictive measures from 2008, I think the most number of these harmful trade interventions have been made by the US and India, which is surprising, right? Because US is supposed to be this champion of free trade and all that. But clearly times have changed. And as for policy makers, I think the key takeaway is, of course, we can sit and lament on deglobalization and, restricted trade and so on. But I think the bigger challenge for us to work within this environment where, concerns such as security, resilient supply chains seem to have dominated the policymakers' minds. So it is our challenge in these times to work out solutions which are still pro-trade, but within the contours that have come up due to various geopolitical factors. But moving on, just on terms of services, because I think this is one of interesting part of the analysis that you have made and we were talking about earlier. So can we say that the loss in merchandise exports is going to be compensated by services in the future? Or do you think there is less sort of bickering over services trade at a global level? Or do you think services is the future of world trade?
I do believe that services has already become a very significant part of global GDP, right? So if you look at global GDP of over $100 trillion, I think about 62, 63% of that is in services of global GDP. However, when you look at global trade, which is in the 40 odd $trillion, when you look at that, I think like only about 21% of that is in services. So I think that's something to remember. So it is easier to export and import goods, merchandise goods, than it is to export and import services. Because services, by their very nature, other than say transportation, travel, let's say financial services, insurance, those kind of things, right? So those are easier good services to trade in. However, things like medical services or education services and environmental services, etc. So these things are typically done in person, right? So they're like, you have to be present on location in order to sort of deliver those services. With globalization itself taking away so many jobs, there's a lot of like, resistance to immigration, etc. Because people look at it and say, hey, I've lost my old manufacturing, good middle level manufacturing jobs in the US. Now I don't want to be more encouraging of immigration, right? Even countries like US, which have traditionally have really grown on the basis of immigration, are like, closing down their borders, building walls, and so on. So I think from that perspective, there's a lot of resistance to people coming in and delivering services. The other thing that's happening is the developed world is aging. So, which means that, like, they will need many services which need to be provided to the aging population. However, they don't have enough young people to provide that. So, but technology is now coming to the rescue, right? So, services in the past which could not be delivered remote now can be delivered remote. So you can imagine medical services, for instance, and how, like, with fantastic telecommunication that we've got today, it is possible for people to study, to actually conduct lab reports. I mean, studied lab reports and press and report on them. You could even have like robos running labs, robos in labs in the US being managed by somebody sitting in India or in other countries and like sort of operating them and actually running laboratory tests remote. You could have high. I mean, if you look at the US and let's just take we're talking about medical healthcare costs in the US today are at about $10,000 per capita. India's GDP is a fraction of that, right? So, I mean, that's the kind of cost which healthcare is in the US, and it's becoming unaffordable for many. Therefore, I think there's a great opportunity for countries like the US and the developed world to reduce their healthcare costs by outsourcing many of those services to doctors in India and elsewhere, and being able to get the services done of the same level of quality. You could have like a specialist who's there in the US, and you could have second level of doctors in India. So it could be a combination of all that. You could have new business models and medical care that could be seen. Similarly with education, I mean, I think education's become absolutely prohibitively expensive in the US, especially. There's over $3 trillion of unpaid student debt in the US. And all this is because the cost of education is so high, but they're not able to get the kind of returns from that education which are commensurate with the cost. Now, if we can deliver many of these education services by by people sitting in other countries. That's one way of looking at it. The other way of looking at it is the quality of education in the West is fabulous. But somebody sitting in Somalia or in India can have access to the same quality of education, and they can increase the number of people they serve because it's now delivered remote, and therefore overall cost of education even in the West could go down. So I can see multiple models emerging in all these areas, which could lead to a greater trade in services across the globe being made possible through the technological advances which are taking place today.
Right, but I think here the challenge still remains as to the kind of services which can be delivered at on an impersonal basis, right? Because if we start including immigration into the equation, now that's another tricky issue in the current geopolitical environment, because countries are probably not very enthusiastic about immigration as such, and even for service exports that might become a challenge. So even with technology, see, I think for health and education, you pointed out a few examples, but the challenge still remains to find those kind of services which are impersonal and can be delivered on a remote basis.
Yeah, that's absolutely true. I mean, services growth has been faster than growth in manufacturing, especially in trade. So if you see, it's growing at over 10%, while the rest of it is growing at like a small, low single-digit percentages. So I think in general, there is a trend towards increasing it. And I agree with you that not all services can be delivered remote. Now, many of the services will still need somebody to be there in person to provide it. But I think you can imagine multiple things. For instance, I was just reading the newspaper the other day about somebody sitting in Bangalore controlling a rover in the moon. Then why can't you have we're talking about drones doing deliveries for Amazon, and I can imagine the drones being flown by somebody in another country. Right? It doesn't have to be necessarily someone doing that. So you could have drone flying. And similarly, you can. I was also thinking of a more wacko idea of like, you have driverless cars, but you can have like people but the person who's but you may not want to have completely driverless. You want someone to manage it. And what if that person who's driving that driverless car is actually not sitting in that place in that country, but somewhere in other country and driving the car remote and just guiding it and making sure that yeah, it's driving, but like if anything goes wrong, immediately you apply the brakes or whatever, right? So you have things like that which are possible, but I think time will tell us about how services can really take over. Can it fill the gap that like shrinkage in manufacturing will leave? I'm not yet sure that it'll happen overnight, but nevertheless, I think you will definitely see services as a percentage of global trade going up from the current 21% to over 40% in the next decade or so.
Right. And as basically policy analyst based in India and thinking about India's policy issues, I can't help but wonder if, this is an advantageous situation for us in the sense that, always traditionally speaking, Indian economy, almost every analyst has this case that we sort of skipped over the manufacturing bus and we just joined the services trade, and services became such a huge and important component of our GDP and so on. And even in terms of our export growth, most of it has come from the services sector. So with this global shift in which so global services trade is seeing an expansion, and maybe at the cost of manufacturing trade or not, but still the fact is that global services trade is growing. So does India stand to benefit from this? Can we leverage this? Are policy measures that can be implemented here which will help make sure that India catches on to this new wave of global trade? So what are your thoughts on this?
Sure. I think like the Economist in July wrote a very interesting article called The Manufacturing Delusion. And it talked about how countries like the US and the developed world was all trying to get back to manufacturing, because manufacturing was seen as this engine of the economy which provided good middle level jobs, right? While so And the death of manufacturing in the US has led to large scale unemployment or disillusionment, at least among a certain section of the population. But I think, they talk about multiple things. They gave some 4 reasons why that's really not possible, because they said there is a changing face of manufacturing. Manufacturing no longer provides great middle level jobs, but provides some high end jobs and many low end ones. They talk about the example of a factory in Germany which was supposed to produce electric cars, and there's just hardly anybody in the factory, right? It's only everything is sort of managed remote. And then they talk about innovation can thrive only when both manufacturing and the R&D are sort of together. While there are examples of Korea, etc., where it has been proved that the area which you outsource to manufacturing might sort of have an impact, might see less innovation, but then the people who are doing R&D will spend their time more fruitfully on all aspects of on other areas where they can be more successful, or where it can be more useful. Then they talk about green transition, and the fact that the world has to spend a lot of money on green transition. There's going to be a big opportunity for that. But I think that's not really the case in the West, because they say that many of these things, this transition can just be done by improving the way things are done or changing of process, etc. It might not all lead to new manufactured goods and so on. So, but I think India is slightly different. I think, first of all, when you look at the green transition, India is not about green transition. India needs lots of new jobs. We will need lots of new capacity. So we need much more energy source, energy, the power plants and so on. So the idea is that whatever new is done in India will be done afresh. There'll be a lot of greenfield effort in this shift. Therefore, there will be more manufacturing requirement in India. So that's number one. Number two, I think India is not a country where we are doing a lot of design and then sending out manufacturing elsewhere, except in chip design, for instance. We have lots of chip design outlets in India, but a lot of the manufacturing of chips is done elsewhere. Maybe there's an opportunity there for us in manufacturing as well. Then the third area is in India, we need many jobs. So any kind of job is a good job, right? We need 20 million jobs and a year in India, because we have 18 million people who turn 18 every year. We have about 100 million people who are surplus in agriculture. And all this cannot happen without more jobs. And whether it comes from manufacturing or services, we should be happy. Raghuram Rajan feels that, maybe we are fixated a bit with manufacturing, and we should. But I believe honestly that India, it's not an either or scenario. And I think even Raghuram Rajan admits that it's not either or. He's only saying that if there is a choice in one of time, bandwidth, and resources in terms of what you promote, Indian policymakers should focus on services, because services is the future. And we have some strengths in services. Why not take advantage of it and make that grow? And I agree completely in that respect, right? While we may not be able to we will not be able to replace China as the manufacturing capital of the world. I don't think that's something we should aim for. We can take some advantages. There are some, China's manufacturing exports are about 10 times that of India, 8 times that of India's manufacturing exports, right? So from that perspective, I think if we can get a bit of a market share out of China because of this whole China plus one strategy, I think it's a good thing. So I think we should try and capitalize on that opportunity which exists today. India has got some strengths in a few areas. We've got all these PLI schemes which are coming through to sort of support manufacturing and local manufacturing and so on. I think our PLI schemes need to be directed much more towards those areas where jobs can be created. It should be linked to job creation rather than just output. And there are areas in which we are actually very competitive, and I think we should make sure that the PLI schemes go towards those areas where we are competitive, so that we can build really strong, globally competitive enterprises, not just somebody who's doing import substitution. That's the key that I'm talking about when it comes to manufacturing. But importantly, India needs to make serious efforts to upskill its workforce, right? I think that's very critical. And we need to do that because jobs of the future, whether they be in manufacturing or in services, are going to require new skills that we don't have. And therefore, how successfully we do that will determine whether we will take a significant part of this share or not. Right? I think that's what I feel. I think there's a big opportunity for India in services because we already have strengths in that space. We should capitalize on that and sort of build on it. But there is no need for us to ignore manufacturing. I think we need to do both.
Yeah, like you rightly pointed out, it's not either or. It's anything which contributes to jobs and economic growth overall. And given the global headwinds, though, that how the global services trade is growing at a faster rate than goods trade, and that it's going to form a larger share of the pie of overall global trade. I think these headwinds sort of point in a direction where India should definitely leverage the opportunity. And why not emerge as the global services capital, right? If he can't be the manufacturing kingmaker or the king. So in any case, thank you so much, Sridhar, for joining me on this conversation today. It's very insightful, and hope to have you back on All Things Policy again.
Thank you very much, Shri. Pleasure talking to you.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app, ivmpodcast.com, or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVM Podcasts on Twitter, Facebook, and Instagram. And hey, if you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.